Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Monday, March 6th, 2017. Well, folks, let's talk about Twitter. A lot of people are interested in understanding what's going on here. I can't tell you how many investors want to buy it in this range because they think it's going to get bought out for $25, $30 per share. I'm here to tell you right now that is not going to happen. If it gets bought out, it'll be probably $20 maximum, which is not that much upside. The problem with this stock is multifold. First of all, obviously, they're not figuring out how to monetize the subscribers and the users of Twitter. If that changes, yes, the whole game changes. But honestly, they haven't done that yet, so I don't think you should bet on that. Now, the key is also, look at the chart. Look at how it's trading here with the market at all-time highs. This is not a good performing stock in a market that is so freaking bullish. So you have to take that into account when you're thinking about investing. I personally am staying away from this name because, again, aside from a potential buyout, it has very little chance of doing much until they figure out how to monetize the subscriber, the users of Twitter. The key also is take a look, right? So you have this key support right down here, and again, we can connect these recent lows. You have this low here, this low, and right over here, and we're right into that. I think this is going to break to the downside, folks. Again, listen, the market, again, doesn't seem to want to correct right now, and I think that's fine. It can do what it wants, but you all know at some point it's going to have a pullback, and when the market starts coming in, that's just going to be even more problem for Twitter. I mean, think about it right now. Like, the markets are basically flat to negative today. They were up big last Wednesday after Trump's speech, but look at how Twitter has reacted. It's gone down pretty much every day. If it can't get bids on days like last Wednesday when the market was up huge, what do you think is going to happen when the S&P 500 and the NASDAQ fall 2%, 3% over the course of a few days? All right, we're going to see this thing falling lower. That's why I have a double bottom target on it right now. And again, you can clearly see down here, this is an all-time low target on Twitter, and this is at $14. Now, at $14, would I take a potential stab at it? Maybe. Maybe I would at that point. I will keep you guys posted on it. But again, I wanted to give you guys a heads up on how you should be analyzing Twitter based on the stock chart. Now, let's take a look at the latest IPO on Snap. Now, listen, there's not a lot of days here, so I'm going to go to the intraday 10-minute chart. We are seeing this thing start to reverse hard. And look at this sell-off here today, folks. And listen, there was a lot of hype at 24 when this IPO'd and opened up, and look at that. It's coming right into here. Now, as a day trader, you probably can buy it for a quick intraday trade here, but I will say this. Their subscriber growth is slowing, all right? And look at this, right into that level right now. So at 24 pairs, you could probably scalp it real quick, but it's got to be a quick scalp. We're talking about in and out in a minute, type of trade here. But the bottom line is, I think this is going lower. All right. Again, you don't have the metrics, and people are comparing it. You have to compare it to Twitter. If Snap hasn't figured out how to monetize yet, just like Twitter. Now, the hope is they will, just like Facebook did. But there's a risk there that they don't, and the valuation here is over 2 times that of Twitter. And again, to me, I don't know. I just don't see it. And look at the bounce right there off of 24. A little bit of an uptick anyways. Probably gets a little bit more of a bounce. But honestly, this is a very short-term bounce. It's going lower, folks. I think when this gets below 20, you start to look for a very short-term swing trade. Maybe you buy it at 1995, 1990 for a bounce back to 21 or 22. Then you get the heck out because it's going to 15. All right? And again, as we get closer to the lockup expiring where a lot of insiders can sell shares, you're going to see even more downside on this, all right? So I got to get going here, get back to trading, but bottom line is come join us at InTheMoneyStocks.com. You want to take the 7-day free trial to the Research Center. You want to get live trades, exact entries, exact exits. The profits are on our track record. Check it out. It is awesome. You will learn so much about analyzing stocks via the PPT proprietary methodology. We will teach you how to become better than the best hedge funds out there. Take care, folks.